If you're in business, one of your key objectives should be to minimise your tax exposure. Now, as a business finance coach and a UK tax advisor, I often work with clients to find the most efficient ways to manage their finances and take the money out from the companies they've worked on in the most tax efficient and harmonious way without getting a knock on the door from HMRC. Now, one underused strategy is to use something called benefits in kind. Now, this strategy not only maximises your tax efficiency, but it also provides benefit in terms of staff recruitment and staff retention, and it's a great way to reward yourself even if you are a single director company. Now, if you compare this to a salary versus dividend strategy, you find it's much more powerful than you think it is. And in this video, I'm going to look at the framework for benefits in kind, as well as its relative merits. The numbers will come next week. Now, benefits in kind are perks or advantages provided to employees, and that can include yourself as a direct employee, in addition to your salary and something classified as dividends. It can go from company cars, insurances, medical insurance, gym membership, private phones, you name it, there's a whole wide range of benefits available. Now, one merit of a benefit in kind strategy, and there is more than one, is obviously tax efficiency. When I say obviously, it's obvious to me, not always obvious to the business owner. And one of the primary advantages of benefits in kind is the potential for significant tax savings, especially when we're grabbed by fiscal drag. Unlike salaries and dividends, which are subject to income tax and also national insurance contributions, many benefits in kind can be tax-free or enjoy lower tax rates. Many of them don't get employees' national insurance levied on them, and that's a great benefit there as well. Now, for example, if you, as your company, provide yourself or your employees with a mobile phone, a company mobile phone where it's contracted to the name of the company, that can be used for business and personal use tax-free. It also counts as a tax deductible for the company. Workplace parking can also be factored in there, childcare vouchers, just to name 3 examples there. So it's a very attractive option. The second merit is cost efficiency. Now, giving benefits in kind, it can be a very cost-effective way for a company, doesn't matter what sort of company, whether it's private or charity, to reward employees. Now, salaries are normally taxable above a certain amount, and if you're a private company with dividends, those dividends can attract tax rates up to nearly 40%. Ouch, that's going to hurt. The cost of providing your company providing those benefits to your employees, including yourself, is much cheaper than you having to fund it out your own pocket. So we talked about gym memberships. Life insurance can also be classified as tax-free, and effectively, depending on the volume of benefits you want to provide, you can also negotiate some favourable discounts as well. It saves money, improves employees' well-being, which also can lead to higher productivity. Now, I mentioned earlier on about employee satisfaction and retention. So very much in today's marketplace, you've got a very competitive landscape here. So salary is not the only inducement you want to give to your workforce. Providing a wide range of benefits here may cost you a little bit of money. It's going to be cheaper than the employee funding it themselves, but it's a great way to retain and reward employees. The range of benefits in kind are extensive. I said in next week's video, I'm going to go through some details. I'm going to share some more detailed number crunching with you as well. Now, flexible working arrangements, professional development opportunities, training courses, non-cash perks, vouchers that you can give to employees can also be provided tax-free. Can also be counted as a tax deductible for the company. Employees will likely feel more valued and supported. Money is not the only primary motivator to keep a workforce happy. Those other things outside of salary count for a great deal. Now, if we compare benefits in kind to salary and dividends, for example, dividends will be applicable to a private company, then we're going to find there's quite a lot of differences between the two. So, for example, the most conventional way that most accountants will talk about for extracting money out of a company is salary and dividends. There's nothing wrong with that, but it doesn't really maximise the opportunities that are out there. Now, if we take salaries, for example, now salaries for very small companies, typically they say you pay a notional rate there, so you at least get the credit for the national insurance, that counts towards your future state pension and other benefits, and the rest of it is taken out by dividends. However, because allowances have been frozen, you're going to be pushed more into that if you count dividends, into a tax bracket, and you've got tax at a bare minimum of 20% on that. Also, subject to the wages and salaries that you pay out, not just to yourself, but your employees, you're going to have employees' national insurance. The employer's national insurance, by the way, on top, at the current rate of 13.8% is levied, okay, and there is no upper limit. Benefits in kind are still subject to national insurance contributions for the employer, but the value of that is much less than an equivalent salary would be. You're going to reduce your payroll costs, you're going to reduce the money that goes into HMRC coffers, and that can't be a bad result as well as adding to your own financial health. Now remember, a lot of these dividends that we talk about are for private companies, but benefits in kind can be made available by charities, not-for-profits, as well as private companies. Now, if we are talking dividends technically speaking can only be made if you've got the cash reserves, but more importantly, if your business has got positive reserves to pay it out of. That's a legal requirement. If you do make a dividend distribution, your rates on dividend tax as an individual can range from as low as 8+% to nearly 40%, and that could be quite significant. And dividends, by the way, do not count as a tax-deductible cost. So in essence, you're paying twice on that distribution. No tax relief for the company, and effectively you're paying income tax on it as well. Now, the financial planning aspect can be quite tricky on these things here, so there's nothing wrong with the dividend route, but certainly you need to consider that third option of providing benefits in kind. As I said, some benefits can be provided tax-free, more of that in next week's video. Some benefits will retract a cost there itself. But let me leave you with this final thought about benefits. Just imagine, for example, your employees pay for their own mobile phones. They happen to use those for work purposes. Well, think about how much they've got to earn to give them that net income in order to fund that phone purchase and the phone contract. If you stepped in and you paid that on their behalf, one, you could deduct that against your company profits. Number two, it's a benefit which will make the employee feel a bit valued. They can use it obviously for personal reasons and there's no additional benefit in kind. But thirdly, it's going to be cheaper if you look at the two together to pay it out of the company as opposed to the employee having that net income to pay it out themselves. This tactic works very well, by the way, for small business owners who run their own companies and there's a relatively small workforce, perhaps just themselves or somebody else. There are some caveats that go with that, but it's certainly something you should explore. If you feel that's for you, folks, then drop me a line, book a time, and we can explore that tax extraction strategy for you. Book a time if you want to find out more. We've got resources on the website for you to have a look at. Even if you want to explore that option for yourself, then let me know. And let me know, do you have any current strategies that you adopt in your company? Do you have any benefits that you provide to yourself or your employees? And folks, please do check out the show notes, by the way, for a link to the Numbers Know-How community here, where apart from training opportunities, directories, being part of a fabric of like-minded businesses and entrepreneurs here, it's a great way to access ready value and support to help grow and develop your business.